Hey everyone, welcome to today's video. We're gonna look at Nio and when the company will be profitable, or if the company will be profitable until, let's say, December next year. I think this is a very important kind of statistical look at it. It's very important also to look at the power swap business, which right now bleeds quite a bit of money for the company. We know, for example, that Xpeng just recently had their earnings report, and we could see that the gross margins were kind of really good, especially compared to Nio. Now, how is that possible for Xpeng despite lower average selling price to have a higher gross margin for the cars than Nio has? Well, the simple reason is that Nio are dealing with the battery swap stations, and they cost quite a lot of money. To be honest, it's not only the battery swap systems. I think Nio is having a bit more R&D money as well, as we looked at previously. Their R&D budget is more than Xpeng, even if you normalize for number of cars sold. So it's not only the swap systems, but I think the swap system is definitely part of the reason. Here I try to look at so this is 2024. We could see the number of swaps at the beginning of the year, number of stations, the fleet size, and the average daily swaps per day. And you could see that in January, every 8.4 cars was needed for one single swap. And also, if you look at it, average swaps per station was roughly 23.6 per station. And we know, as according to David Abbott-Ball on Twitter mentioned, which is from one of the earnings reports, I think 2 or 3 earnings reports back, they said that they needed 60 swaps per day, or a 12.5 utilization rate, in order to be to have some kind of break even. I'm not sure if that figure includes the capital expenditure for building out the swap stations. But if we forget that part for a moment and assume that 60 is the magic number, we can see that I haven't followed quite deeply on the other months, but you can see that in August right now we're around 51 million swaps, and this is the number that I get from here. And if we now go, so 51 million swaps totally, and 2,482 swap stations, as you can see here. And with those numbers, the fleet size is 585,000 cars roughly right now. These are, we know that at the beginning of the year we had 449,000 roughly, so 450,000 total fleet size. And if you add each monthly deliveries for each month, we are roughly at this pace. And the daily swaps right now are around 77,000 swaps per day. These numbers I get from this gentleman, Nios Swap Info on Twitter. Give him a follow, really nice data. So the daily swaps is around 77,000. So now you can see that according to this data, it looks like first of all, the swap station build out rate is a bit slower now, which I kind of like, because let's not spend too much money on building out more swap stations. Let's make sure that the average use per swap station goes up, average swap per station, and this is something that we kind of see. So this is something I do like. And also you can see here that the number of cars required for each swap. So it's essentially a figure of that more people are utilizing the swap stations, and this is again the number of average swaps per station. Now, to be honest, we know that Nio previously and also now give incentives to the people buying the cars. Some people have up to 6 swaps free per month, and you can see that this person on Reddit saying that he actually gets 6 free swaps a month, and usually he uses the swap stations roughly 9 times in a single month. So with that, and he also says that, for example, one time he changed a battery at 30% to a battery that was charged at 90%, and it costed him around 90 RMB or $12. I think these numbers are quite interesting to understand, because that tells you that not all swaps are giving Nio revenue, because they had to get people incentives to buy the cars. And we know that there are a lot of people that can get up to 3, 4, 5, 6 different swaps depending on the incentives that they had at the time of purchasing. But looking at extrapolations, I think by end of the year maybe they would have 2000 north of 2500 swap stations, a fleet size of just below 700,000, and this is based on another 90,000 cars delivered, or thereabouts 100,000 cars delivered in the remaining months of the year, which is half of August and then September, October, November and December. But yeah, let's say another 100,000 more cars. And since the swap build out is slower than the fleet size expansion, we would arrive at roughly 91,000 daily swaps. This is assumptions. If we assume that the number of cars per swap stays the same. So if for each 7.6 cars use the swap station, we would have around 91,000, and then the utilization of the swap station would go up again. So this is something that we do like again. This is amazing. And then once you extrapolate to next year, December of 2025, you would assume, if we are assuming roughly 100,000 to 120,000 new cars per quarter, that would be around 400,000 to 500,000 new cars. And I just took the number of 1.1 million total fleet size. Daily swaps would again stay in at the number of, let's say if they are still at 6.7 cars per swap station, per swap, that's just below 150,000 daily swaps. Utilization rate of, let's say 39 swaps per station. So again, not we're getting closer to the the break even, but yeah, it's not really at a point where the swap stations would make any money for Nio even until December next year. Now obviously you could have a play with these numbers, but I think that this is gonna be taking some money away from the other business, the car manufacturing business. Now in all honesty, this doesn't include that the Nio just announced on Nio Power Day that they will use the swap stations for grid power balancing, which can make them quite a bit of money. Difficult to say, so that's something that I will look at in the future and combine it in a total score. But I think that's gonna, so this is the worst case scenario, with the caveat that of this number here, average swap per station, as I mentioned, some people are getting free swaps still to this day, depending on the incentives that they got previously. So now if we look at the financials, I think this is very interesting. So we can see that here average selling price of Nio is going down. Nothing to be worried about unless it goes down faster than they are able to monetize their sales. But we can see that Q1 is the gray column here, Q2 and all the yellow are the future numbers that we still don't have. This gray number here on Q2 is the vehicle delivered, which we do have. Assuming on a slight decrease of average selling price from 38,632 to 38,000, so around $600 less of selling price per car, we get our vehicle sales of this number, 2.180 million. If we add to it around 235 million US dollar other sales, the combined revenue comes in at there 2.4 billion or thereabouts, which is just above the guidance that they gave in the previous quarter. And that's I think the beat is because of they also beat the expected sales. I think they mentioned 54,000 to 56,000 sales, but they arrived at around 57,000. So slight beat maybe in their revenue, but that's not the important thing there. We look at the gross profit. I assumed a gross profit of 10%, a gross margin of 10%, which is kind of based on, if you go back not to the previous quarter, but the quarter before that, when they delivered 50,000 cars. So in the same ballpark that we have now. But now we delivered a bit more. So my reasoning there is that we know that some of the other cost has been coming down. We know that the battery manufacturing cost has been going down since the lithium carbonate price has been going down, as we've been following quite ferociously over the past year. So that's one of part of the reasons that I do believe that they should have a better gross margin. Also, they have higher numbers in sales, so the economies of scale should come into play. We also saw that Zeekr and Xpeng had increased margins over the past quarter, So this is why I arrived at around 10%. Could be maybe 9.5 or 9, but let's hope for 10%. If you assume a 10% of gross margin, you would have a gross profit of 242 million, and with that we should have, we should have a cost of sales of around just north of 2.1 billion or below 2.2 billion. I assume the higher vehicle margin. Again, Nios vehicle margin is higher. The reason that the gross margin is lower than the vehicle margin is because of the battery swap business essentially. Whereas for Xpeng, I think it's the reverse. Their gross margin is higher than the vehicle margin because their other sales come into the play. So yeah, again, the battery swap stations are a burden for Nio right now. They are not making money for them, and they will be, as we looked at it, assuming and based on this, until at least end of next year, probably also end of 2026. That's when maybe they could start to make some money on it, and also if some other car manufacturers start to utilize it. And then if we go back again, so we can see here that we talked about the gross margin, the vehicle margin. I hope that they don't increase the R&D budget a whole lot over the upcoming year, but for the next quarter I assumed roughly the same ballpark as the previous quarter. The SG&A, this one is difficult for me to know how much, because you can see that they had one quarter in Q3 of last year where they sold 55,000 cars, which was essentially in the really same ballpark that this quarter, which is 57,000 cars. SG&A was just below 500 million. So I do not think they will have more than Q4, which was 560 million. And usually SG&A most of the time is less than their R&D budget. But this time I think it will be more, the same case as the previous quarter. So let's assume that it's less than Q4 last year and close to Q3 last year. Maybe we can increase it. Let's increase it to 485. This should give us a loss from operation which has decreased almost 100 million compared to Q1. It's good in a sense, but also they are almost doubling their sales, but the loss from operations is essentially going down just by 100 million. So it's not, I don't know, it's not the loss from operations is not going down as much as I would have liked according to these estimations. But again, these are estimations, so let's wait and see. But then doing this same kind of analysis, and based on a, let's say, bullish 120,000 vehicle deliveries for Q4 next year, a decrease of average selling price again, and then somewhat increase the R&D, and let's say even if we increase the SG&A to, heck, let's go with 570 or even 580, or let's go with 600 as because I think they would require a bit of more salespeople based on selling 120,000 cars compared to 57. So doing that and increase this net loss from operation, this is the difference between loss from operation and net loss is some taxing differences, and let's go with 250 here. These are very rough estimations. So even next year I don't think we will see any profitability, although they will be much more closer. And the question is, I don't remember now, but I think they had 5.5 billion cash, so at the end of last quarter. So if you add to it, let's say they have 5 billion and then you remove 570, 485, that's already 1 billion gone. So now we are down to 4. And then you remove 350 and 250, that's another 600 million gone. So now we are close to, we are down to, let's say, 3.5 billion or 3 billion remaining. So I don't see risk for maybe dilution and capital raise, at least not until Q4 next year. And at that time we should have, I actually forgot that there's Q1, Q3 and Q2 of next year as well. So that's another, let's say if on average 300 million, so that's another 1 billion. So they would be at around 2 billion cash on hand by end of next year. That's not, that's not a whole lot of money, so I wouldn't put it past them that they would raise a bit more money. Now obviously these numbers are just estimations. There's one potential that the R&D budget stays the same because they have roughly, you know, they have quite a nice number of cars out there now. So maybe they increased the number of models being selling from, let's 8 or 9 to, I don't know, 10, 11. So I don't expect, you know, going from whatever number of cars models they are selling now to double on that. So I don't think the R&D will increase by a whole lot going ahead. They also reduced the number of people working there in the R&D side quite a bit by end of last year and early this year. So I also think, you know, there's room for better consumer power out there globally and also in China. So there's potential for gross margin increases. For example, if you increase the gross margin, let's say if they manage to do let's say 20%. So if we increase this gross margin from 16, so if we have a 20% gross margin, now things looks much better, you know. Things looks this could be, you know, I don't know, 80. So they could reach break even very close to Q4 next year based on those numbers. And if the gross margin improves and even if the average selling price goes up a bit. So yeah, it depends quite a lot on different stuff. But I think the most realistic point of view is that by Q4 next year they should not be able to, you know, have some kind of break even at this kind of stage. We will obviously follow this by each quarter. Let's see on 5th of September how the Q2 numbers look. If we see like an increase of gross margin there to, let's say, 12% surprisingly, that could obviously, yeah, that could help quite a bit. So yeah, but let's wait and see. And this was just a update on, you know, a different update on the infrastructure and how much a burden the swap stations is right now. We know that on the power day a couple of days ago they mentioned that they will start to look at the grid balancing. That will make them some kind of money. And there's all the other additional, you know, benefits of the power swap stations, that you can easily change your battery if there's any degradations or any warranty issues, in addition to the, you know, the choice of maybe going with a small battery and then when you are going on a longer road trip you change to a larger battery. So there's these additional advantages as well. But also on the other side, there's always the threat of, you know, faster charging batteries. You know, I wouldn't be surprised that in 10 years from now the batteries could charge in 10 minutes, at least from 0 to 80%. So that's still, you know, maybe that's gonna win the market anyway. So I don't know. I think if I was the CEO of Nio, I would try to focus on not expanding the battery swap station rate. I wouldn't like them to be at these 3,000, 4,000 numbers next year. I think they mentioned on the Nio Power Day that they will have a new factory for battery swapping that will manufacture over 1,000 swap stations per year. And I think they had a goal of 4,000 to 5,000 swap stations by December next year. I wouldn't like to see that, because I think let's slow down here on the build out on swap stations. It's quite heavy investments. Let's make sure that the people are actually using the swap stations. Why not, you know, have, if this number was, you know, at 3,000, so if they slow it down quite substantially, you can see the difference that it makes. So if the swap stations goes down to 3,000 swap stations, the average swap per station goes to almost 50, very close to, and that's gonna be much less of a burden on Nio. So I think, yeah, I'm not too fond of the management in terms of, yeah, as I mentioned, we are going to be close to 2 billion cash on hand by end of next year at this rate, if all these assumptions are correct. So it puts some kind of question on my mind as an investor. But again, this was just an update. We see that the stock still, you know, around $4 US. It's a shame, to be honest. The price to sales ratio is very low, but people don't care about that at this stage. I think the most important thing is, you know, how much money they are able to make, or in this case not lose, because another dilution is a risk. We can see that they diluted the share from 2019 level of 1 billion shares to now 2 billion in 5 years. So it's not a nice look, to be honest. But let's wait and see, and thank you for watching the video. Please like and subscribe, and see you in the next one.